Christina, thank you so much for joining me today.
Well, Dana, thank you for having me.
I'd love to start out hearing a little bit about your branding journey. How did you go from being in the corporate world to being an entrepreneur?
Well, okay, so my branding journey it's in the making for the last 20 years of my career. Let's put it that way, because I never in my mind that I thought, okay, you know what? Like I want to become an entrepreneur. So I didn't come from an entrepreneur family. I didn't think that, like I want to become an entrepreneur because one thing that I do not like, it's marketing. Okay. So that's just one thing I don't like. But I got to a point in my career and my life where I thought, okay, what am I doing here? Like I have my core values, but my core value while I was working at the corporate, it has to somehow match what the company, right? And I've been looking, and then I've been moving from one company to another, but I never really find it, right? So my when I step out from my corporate and then end it, I pretty much just walk out. I went into my boss and then I said, you know what? I cannot do this anymore. And I cannot do it because my core value uh is not being met here in the company. What I really love to do, I love finance. I love doing all of that. But I cannot empower others because the company does not believe in that. I cannot inspire others. I felt that I have to work in a certain rules within the company, and I just cannot do it, right? So I thought to myself, if I keep looking, I'm going to wait until I'm 80 years old before I find something, if I'm lucky. So I made the decision, instead of keep looking for a company, I'm going to create my own company. that's like my branding journey, because I really value giving value to others. Value creation is really big for me. Empowering others, integrity, and fun. Being fun. And then I know a lot of people probably thinking fun and finance, where is that? But finance is fun. Let's just put it that way. And then we can talk about it more later.
Well, it's so great that you were able to create a business centered around your values and the things that you really want to do. So I'm curious about how you are identifying your ideal client. So you work with people to get them from 6 to 7 or 7 to 8 figures. How did you decide that this is the market you want to target, and how do you target them?
Okay. Because my experience in finance and then first of all, I have to think, I go into business because I want to do something that I enjoy and I want to give value to my clients. And another piece, it's about building relationship. Okay. So when I say, who do I want to work with? Who gonna get the most value from my experience over 20 years, right? And it's not that I am not ever gonna work with people that is below 6 figures, right? Because I know that there are entrepreneurship is like going up. It's like every year is going up. But the thing is that when people who just starting out, they focus on revenue. They focus on marketing, okay? Now, my belief is that if you focus on revenue and then you don't believe in scaling to, how should I put it? Okay, if you focus too much on revenue at the very beginning, you cannot get the most from my expertise, because my expertise is about grow a business that fuel the life that you really want. It's about sustainability of the business and sustainability of the of your life. Okay, at the very beginning of a journey, everybody is focused too much on revenue. And then they want to increase revenue. They want to focus on marketing. I get it, because you know what? That's what brings the cash inflow. I get that. Now, when I choose my clients, I said, okay, I need people that have a legacy. They want to grow. They want to be in this entrepreneurship journey for the long run. It's not only for the short term. So who wants that? And then majority of people, when they are thinking of scaling from 6 to 7, 7 to 8, they don't have a great foundation on how they can do it financially and in a sustainable way. Okay. So because of that, I said, I can use my expertise because I believe in long-term strategy. I believe in bringing your vision to life, but by having a strong finance foundation and then put that into growing and scaling your business. That is my thought process, because in the early journey, you need to have a process managing your cash flow. But when you are thinking about growing to 7-figure and 8 figures, trust me, if you don't have that financial foundation and then you're only focused on revenue, I can guarantee you, you will not have a sustainable business, and then you will not have business that's going to last you 10, 20, 30 years.
Okay. So I want to unpack some of this. I want to hear more about your growth journey and things, but there's a lot of things that kind of went ding, ding, ding to me. When you talk about revenue, what are some of the misconceptions? Because there's a difference between net, gross income versus revenue. Can you talk a little bit about, for those who are listening who may not be super financially savvy, and talk a little bit about, when you talk about revenue, the focus on revenue and also the difference between, income and profitability?
Okay, sure. So, okay, here's the thing. When I look at revenue is about cash coming into your business. That is a result of your marketing strategy is working well. Okay. When I know a lot of people are talking about profitability, they're talking about gross margin. It's all great. Okay. But to me, the most important thing, it's about having positive cash flow at the end. And then when I say positive cash flow, it's taking into account your cash inflow that you bringing in from your great marketing strategy, and then managing your cash outflow. And your cash outflow, it means that everything that you pay to your contractors, everything that you pay to your government because you have to pay taxes, and everything that you have to pay yourself. Okay? Once you do all your expenses, at the end of the day, that number, the bottom line that a lot of people call profit, I call it positive cash flow. That is the number, it's the cash in your bank you can basically invest back to grow your business. There's a lot of myth out there where people are basically saying, if I want to scale, I have to increase your revenue. Yes, that is one formula, okay? But if you bringing all the cash, you have all the cash inflow, but you don't manage your cash outflow, you will not have a positive number. I've seen it with the company that I work with the clients that I work with right now. You can have revenue, 7 figures, 8 figures, and then you're still paying yourself like $50,000. And then I've seen it in a corporation where their revenue is like, 9 figures, but at the end of the day, the company struggled to pay their employees. So I don't want to use the word profit, Dana, because, profit, there are a component of cash and non-cash. I love to talk about cash, positive cash flow, because cash is what you need to survive, to have a sustainable business. Without cash, without positive cash flow, your business is not going to survive.
So what would be an example of a non-cash profit?
Okay, so a non-cash profit like a lot of entrepreneurs probably do not see this, because you're going to bring all your receipts and all your transactions throughout the year. You bring it to your tax accountant. Now, if you look into more details on what your tax accountant prepare, there is an item called depreciation. That is non-cash. That is just an accounting transaction. Now, the thing is that a lot of company, I think for a lot of entrepreneurs or digital entrepreneurs, that's why I say you won't seen it, right? But as you are growing bigger, as you are scaling, right? If you look at your number closely, there are certain things like depreciation that is non-cash. It impacts your profitability in a sense term profitability, but it's not a cash. So why do you care?
It's like if because your computer or your office furniture or whatever depreciates in value.
Yes.
So that's what it affects your profitability.
Exactly. But if you think about it, right, you purchase you purchase your equipment upfront, way upfront, right? Your cash is already gone. Who cares about the depreciation? It matters for your tax calculation, but it does not matter for your business.
That's helpful. That's really helpful. So as service providers, and I know a lot of our listeners are authors who get paid twice a year, and service providers like me who I'm very fortunate that our clients pay on time, but there's always been the rogue client who you have to chase down and get them to pay. What are some ways that you've worked with your clients to manage the cash flow?
Okay, so here's the thing. I told my client, if they are a service provider, to basically monitor what you call your account receivable. Okay, and your accounts receivable is exactly what you are saying to me. It's the money that your client owe you because the service has not been provided yet, right? Because you have, like, for example, I'm going to tell you, you provide the service right now, and then you're going to receive the payment maybe 15 days later, 30 days later, right? And at the same time, you also have subcontractors that you have to pay. Okay. When you are working on a project, okay, my suggestion is always look at what is the term that you are giving your clients, and then you have to match it with the subcontractors that you are going to pay. A lot of people are forgetting that because they're saying, okay, well, my subcontractors are asking to be paid now because obviously they want the cash. But then you become really nice, and then you tell your client, you can pay me 15 days, 30 days from now. So you see the mismatch in there. Because of that, like when you look at your project and then what the cash that's going to go in and then cash that is going to go out, you match it as close as possible. That is always an advice that I always look at their cash flow. And then when I talk about cash flow, I really get into the details with my clients. Let me look at the schedules of all your clients, and then when are they going to pay? Then let me look at all your expenses. When do you normally have to pay your expenses? Because when the cash flow is mismatched, what's going to happen when some business is lucky and then they have line of credit, they're going to dip into their line of credit and then they're going to forget to pay it. One. Second is credit card. They dip into credit card. And then we all know how expensive if you're owing money to credit card. So planning. That's what I told my client.
Well, and it can be really tricky when, like I said, a lot of the authors are getting paid quarterly, but sometimes twice a year. And so able to manage that over the long term is really tricky.
So you're saying the author got paid twice a year. That's what you're saying. Okay. Sorry. Like, why are they only getting paid twice a year?
Because that's when their publisher pays out royalties.
I worked with royalties company before, and then but maybe it's a different royalty, but normally they get paid like either quarterly, so 4 times a year, but not twice a year.
Every publisher is different. So there's some publishers that pay monthly, which is very attractive, obviously. There's some that pay quarterly, and there's some that pay twice a year. And it's also when you have and then there's also factoring in if you have an advance. The advance is one big advance, so you may not be actually getting royalties because you're still earning back the advance.
Okay.
I know that a lot of the authors' budgeting is super tricky because it's a little bit easier if this is not their full-time work, but once they become full-time authors and this is all that they're doing and this is all they're relying on, I know that the planning for that long term it's really tricky.
Well, okay, it is really tricky, but do they do a cash flow projection? Do they take the time to do the long-term planning about, I'm going to receive an advance payment, and then it doesn't mean that I need to use all the money up front, but thinking more in the long run for the next few months, or I don't know how long is the advance payment, and then start thinking like, what are my expenses? And then instead of putting that money in a normal checking account, put it in an account that it's really difficult for you to take it out. And then take it out and kind of, when I hear advance payment, and I think a lot of digital entrepreneurs out there is also doing something similar, like a publisher, right? They would do a launch and then they get payment up front. And then, they think that money, they can use it right away. But technically, if we're talking about technicality over here, you have not earned that because you have not really done the work for your client yet. So when my clients are doing a launch, what I told them, okay, I'm going to take your money, I'm going to put it aside into a saving account, and then I'm going to tell you how much you need to take out every month for your needs. And then, but you cannot do that unless you do a long-term planning. I know it's a very general answer, but the thing is that with finance, with numbers, the key is always going to come down to long-term planning. If you don't do that, you won't be able to see the big pictures of what's going to happen. And then I understand a lot of people said, I cannot foresee what's going to happen over the next 12 months. But you know what? You have a lot of resources around you. You can ask a lot of experienced people that has been in business for a while. Okay? Because I came from a corporate world. When I started working with digital entrepreneurs, I don't know everything. Okay? Because every single people, they are different. But it's about asking what are the common expenses? What are the common surprises in terms of your finance? And then you will try to match that as close as possible. Is it scary? Definitely. Number is scary because it's going to stare at you like, oh shit. I don't know if I can say that, but you can edit that. But I'm like, oh crap. Like, I'm going to have, if I continue spending money that I receive in advance, I'm going to be in a red, and then there's no more money coming in. So the short answer, Dana, to your question, they have to do planning, especially when it's so, they know for sure they only receive payment for, twice a year. There's no other way around it.
And it's scary because I think for someone like me who's very conservative, I always say, like, I don't like forecasting for clients I don't have, even though historically, you get new clients, you get, you're going to book X amount of consultations, you're going to sell X amount of e-courses. And it took me a long time to actually do forecasting because I would forecast people that were under contract, but I wouldn't forecast for money I didn't have yet or wasn't secured yet. But if you look at historical data, if you're keeping good books, which you should, then you can see, okay, well, this is the pattern that every August and December is a little light, every September and July is very heavy. So it stands to reason that I will get at least X this month. And then also I took the time this year to correlate certain types of clients with certain types of expenses, and to also forecast those expenses, with which is also really tricky when, if we're taking, for example, I noticed that whenever we have a lot of local clients, our meals and entertainment costs go up a little bit, right?
Of course.
Because they're here, we're getting them out for coffee, we're getting drinks, we're doing those things. Whereas the clients that I never meet in person, they don't have the same T&E. So identifying not just the patterns in the incoming cash, I'll use your verbiage, but also the cash out. And I think that having that forecast, I know it's scary, but it also gave me a sense of security that I know that I have a clear understanding of what extra I have. So for example, if we're looking to hire a contractor, what can I actually pay the contractor, or can I actually afford the contractor? It does give you a little bit of security.
Definitely. And then a lot of people, the other common things that I heard from people, when I do forecasting, nothing's really matched to the result. I'm like, yes, I get it. If you do your forecasting every once a year and then you don't look at it every month, then yes, it's not going to match, because you have to think about forecasting. You have to think about cash flow projection, that it's a live data. Something changed in your business. Let's say that you do a launch, at the beginning of the year, and then you plan to do another launch the next quarter. The result may be the same than what you are projecting based on your marketing strategy, based on your conversion rate, right? You know that historically. But if suddenly it does not match with your forecast, you have to redo your forecasting. You have to redo your cash flow projection, because in addition to what you said, Dana, about having peace of mind to understand what you really have left over, it's also, for me, it's like a yellow light in a traffic light where it's hey, you need to slow down, or like a GPS telling you there is a roadblock in front of you and then you need to turn right or turn left. It's supposed to be a guidance for you only if you are committed to yourself that you want to review your numbers. There is no point of you creating a cash flow projection if you do not want to look at it at least once a month.
So I can't just create it and hide it under the bed?
You wish, right? And then this is where, the clients would say, I created a cash flow projection, but it didn't match. I'm like, how often do you look at it? And another thing is that, to what you said, Dana, it's you have to do a cash flow projection based on the best available data at that moment when you are creating that. You can use the historical to project for the future. And a lot of people forget about it. It's a combination of taking your historical data and then looking forward to the future and then say, okay, what makes sense to me? What is reasonable to me? Too conservative is not good. Too, what is the opposite of conservative?
Lofty goals.
Too lofty is also not good. It's just like other guru out there saying, you're going to make 100,000 in 90 days. Sure. How many people you have to reach before you get to that 100,000? You want 10 clients at $10,000. That's the simple math that they normally do. How many clients you have to reach? Cold clients? Good luck with that.
So when you are signing on to work with an individual, an entrepreneur, what is the process from the beginning of, okay, we're going to work together, through the engagement? What is your process of working with people?
Well, I normally, when someone approached me and then they said, I am in trouble because, I have a lot of debt. And, I know I have a slow summer month or I want to take vacation in the summer, but I couldn't. So the first thing is that I will always ask, because my expertise is looking at the long term, and then the person needs to tell me what is their long term. What I want to work with entrepreneurs that really want to leave a legacy, really want to grow their business. They want in this business to be for the long term, not the short term. Okay. If you only want to be in the business 5 years, that my cash flow projection, that's mean by the end of it, it's done. Okay. They have to have a bookkeeper. That's for sure. They need to have a tax accountant, because a lot of when you are scaling, you also have to think about the cash, the tax. And then, there are a lot of tax planning. That is not my expertise. I coordinate with them, with the tax accountant and the bookkeeper, to understand what is the implication in the long run when you are going to scale to 7-figure, 8 figures, right? What is the tax? Is it going to be better if you are a corporation? Can you continue as sole proprietorship? Whatever it is. So the first thing when I have a discussion, I said, okay, what do you really want from this business? Because that is key to me. That is telling me what are your core value? How do you deal with your clients? I want to work with people that treat their clients and value the relationship with their clients. Okay. And then the next step is that, like I said, okay, where do you see your business in 10 years? If they're saying, I don't have a vision in 10 years, then I'm going to dig deeper. Do you want to exist in 10 years, 20 years, 30 years? Okay. Your why you're doing this business will have a lot of impact on how you're going to spend money in your business. And it's also going to have a lot of impact on how you're going to bring the money into your business. So after I understand the why, then we're going to go to the nitty-gritty details about what is your foundation? What is your cash look like right now? What do you want? What kind of product do you have right now? If they have like 10,000 products, I'm like, you're going to cut it down. You're going to focus that. And then, we're going to look at the expenses. And then the expenses is not only like general expenses. I'm going to break it down to where they want to focus, because each product has a different level of expenses. It's not the same. The same way, like you're telling me, your local clients will have different expenses than your online clients that is like 10,000 miles away from you or living in Canada. You're not going to see them, right? So it's really, really different. Breaking it down by product or by group, it doesn't matter. Is it a product? Is it based on region? Is it based on type of industry? But you can break it down into that detail. But I explain the whole process in a big picture to my clients. Then we work in the details later on. But to me, who they are, their why, it's what's going to determine if I want to work with them. Because if I don't feel the joy of working with them, it doesn't matter how much money they're going to pay me, I still going to say no.
I fully agree. If I see their name on the caller ID and I don't want to answer the phone, that's when I know I'm like, oh, we need to break up. This isn't a good fit.
It's not a good fit. I need people that work with me. That's why like I spend 2 hours just talking to them, understanding, because it's going to determine do I want to work with you for the next 90 days.
And is that how long your contract is 90 days?
Yes. I work in a 90 days format until I know for sure that I want to work with them long term.
Well, so that's really interesting. So you get into their books and you get in with all their tax account, their bookkeeper, you get into it with them for 90 days. And at the end of the 90 days, it's an option to continue?
Yes. Because at the end of the day, you know, what I provide is an on-demand CFO service. It's a chief financial officer. So at the end of the 90 days, the result that they're going to get, okay, if their foundation, if let's say that their bookkeeper does not create a strong, it has not been keeping up, or the way that they organize the expenses and the income is not where I can bring my expertise and then project it, right? I will reorganize it. I will work with them, right? And then at the end of the 90 days, what my client is going to get, it's a I will give them a cash flow projection for the next 12 months, because that is you work on a short term first. Once you work on a short term, then if they choose to continue, then I will build them a long-term strategy for the next 5 years, right? And then because it's a long term, there's going to be a lot of tweak, and then it's going to be a lot of changes. And then what I really offer for them is to work on a retainer with me. Because let's say that if you are growing your company, and then you're saying to me, you know what, I want to get a short-term loan. The first thing is that I'm not going to say yes, because I'm a big believer. If you're going to grow, you can grow slowly, but sustainable. Okay. I don't believe for a long-term loan that you get an investor coming in and then, you know, get muddled into your business and your passion. Okay, if you want to get a short-term loan, before I say yes to my client, I'm going to look at their long-term goal first. And then I'm going to say, okay, you know what? I think if we manage your cash flow each month in this a certain way, you will be able to finance your growth. And a lot of things that many times I will suggest to my client, don't grow too fast. Slowing down is not a bad thing, because when you slow down, you're going to build your infrastructure slowly, and you can make sure if you need to hire more people, you can do it in step by step. Because when businesses are growing too fast, they think that they have to hire people right now, like right away, 5 people. At the end of the day, how are you going to feel if you have to let go that people? It's a tough business decision, letting go people that you care. If you care, it's one of the hardest things. So I want to make sure that my clients understand that. You work with me, I'm not going to tell you that you're going to grow to 8 figures in 5 years, unless you have all the infrastructures already right now. And then I know that you're going to have a positive cash flow by the end of it.
That's such a good point. I believe that if you grow really fast, it's really quick to identify what's wrong in your business, right?
Definitely. And then you've seen this with the big corporation, because they have shareholders, they have investors that are like on their back and then keep pushing them. And then that is one of the reason. And then when I decided to work on my own, one of the things that I said, I'm not going to go for a company or a client that wants to go into public offering or want to get like an investor. And the reason is that once you have other people coming into your business, things changes, your value changes, and then you have to adjust to that. It's very hard to find an investor or a partner with the same core value as you are. And why do you want that? If it's gonna put more stress to you and your business and the people that work for you.
Well, it's hard enough I just think about getting hiring employees and creating a culture that has the same values and the same opinions. I can only imagine if they also had 50% voting rights, right? Like at the end of the day, I mean, I value my employees' opinions. I listen to them. I care about them. But at the end of the day, it's my company and my decision. I can only imagine if we were at the mercy of a board or a partner that we would have to make those decisions that maybe are out of step with what I truly value.
Exactly. And then that's why at the very beginning, I told you, I I decided to work on my own because there are certain things that I just couldn't accept any longer. It just fighting inside me. And at the end of the day, I felt empty. And then I didn't want that anymore.
So that's a nice segue to hear. We talked a lot about how you work with your clients. I'd love to hear more about you and growing your business. So when you transitioned from the corporate life to the entrepreneur life, what were some things that you found really surprising, or what were some lessons that you learned early on?
Oh my God. Well, one of the surprising thing is that you have to be visible more than ever. And I am an introvert. That is not in my gene. Especially, like here's the thing. The online world has so much information out there. And I learned it the hard way. I work with coaches that is basically telling me to say things or to be visible in a way that is not aligned with my values. It was a struggle for me to get clients that I really value and then have the same core value. Relationship to me, it's a big deal. It's a big deal when I was at corporate. It's a big deal now. Okay. So I was attracting the wrong clients. Clients that, first of all, do not value honesty, do not value real talk, do not value thinking. And then another thing is that thinking that they can make money really quickly because I gave that impression, like finance out. I'm sure you heard this, Dana. Like you can 10x your revenue, you can 2x your revenue. And then I was going down that path, thinking that if I promise that I'm going to find loophole, bottlenecks, and then bring your profitability and then give you return of investment by 10,000, 20,000, 30,000 after working with me for 90 days, then I'm going to get clients. Yes, I did, but it was the wrong clients. Because in all honesty, finance is not about 10x your profitability. It's not about 10x your positive cash flow. It's about having a process that will let you enjoy your life the way you want it. So I made a lot of mistake in that regard where I need to be visible, but I was not visible in the way that really me. I was forced to be somebody else. So I had to stop myself. And then basically, I cannot do this. I left corporate because it was not for me, because I had to be someone else. And then now, why am I going through this path and then following other people that is not in the same core value as me? Do not see the business the way I see it. So what really surprised me is visibility. I don't like it.
Well, and even the type of visibility, right? So you, in the beginning, when you're just starting out, you see others in your field doing certain things and you think, okay, this is the way to do things. And I fell into that trap too, where as I was stepping into the entrepreneur consulting and coaching space and serving a new industry, I see all the other coaches and all the other consultants and all the other online educators. And I thought that, okay, that's how I should do it. And then I started doing that. I realized, wait a second, I started my PR company doing the opposite of what everyone else was doing. And that's how I got it to grow. And so why am I doing the same thing as everyone else and expecting that it's going to grow? I think that if you, in the beginning, you tend to model what other people are doing.
Yes.
Because you have to learn. I think that's important, to learn what works and what doesn't, and learn what makes you feel icky and what kind of clients you don't want to work with. But I think it's it's hard when it's really tempting to say yes to people who really you should say no to if you want to work with them long term.
Yes, I know. And then I learned it the hard way. And you know what? Like all this guru also telling me, do the online work, do online course, do webinar. And that's where I stopped. And I said, I don't want that. That's not me, because I like one-on-one personal relationship where I know my client, they know me, and they want to work with me. Because like I said, I work for 90 days. I work for 90 days with them. And then after that, I want to continue to have retainer. Am I going to scale later on to online or webinar? Maybe. But I'm not at that point yet. I'm not in a rush to grow my business to reach 7 figures so quickly that I don't enjoy it anymore. I want to enjoy the process. I want to enjoy the journey. I want to be visible, but in the right way. I want to get clients that I can build a relationship. And do I want to reach 7 figures later on? Maybe. I don't know, right? But do I want to be in the business in a long run? Definitely. I have a reason why I'm doing this. My biggest why is my son, because I was traveling so much. I think I didn't get to see him growing up. He's 10 now. For the first 8 years, I didn't get to see him. I didn't get to see his baseball practice. I didn't get to see his baseball games. I miss all of it. And I didn't want that. I want him to know, and all the others that is in his generation, that you don't have to be stuck. When you're not happy, you figure out a way to make you happy. And then if that detour is taking you into a different direction than just like simply the 9 to 5, then explore that. Give yourself a chance so you can feel happy for your life. Because if not, what's the point?
It's so funny how the advice and the wishes we'd have for our kids is we don't take our own advice, right? Like we always tell our kids, like, try new things. It's, you're happy. We wish them to be happy if nothing else. Yeah. And yet we work long hours, grind it out, do all these things because we feel like this is what we have to do.
Yep. I know. And then I fall into that too, right? But that's when I stopped. That's when I said, this is not the life that I want him to have. So why am I doing this to him?
Yeah. And so you were speaking on your podcast, and I'll link to your podcast in the show notes. You were talking about financial self-care. So what is financial self-care and why is it important?
Financial self-care is basically about thinking about yourself first. It's not about being selfish. One of the things that I heard from many entrepreneurs and then even clients that came to me, they were not able to pay themselves. And because of that, they feel stressed. They feel bitter because if they have a partner, the partner is going to say, okay, you work all these hours, 80 hours, but you're not really contributing. You're missing out in a lot of stuff. So when I talk about exercising financial self-care in your business, you have to treat yourself with respect. And then that means you have to work it out in your plan that you're going to pay yourself first. Okay? And is it going to be like a big amount right away? May not, because if you're just starting out, you cannot pay everything to yourself, right? But I had this podcast guest, and then she did a wonderful thing for her financial self-care. She said one of her big expense is about paid advertising. And then she was working with a contractor, and then the cost is like $5,000. And then she said, okay, Well, I'm not going to spend $5,000. I'm going to spend 50% of that cost for paid advertising. And then I'm going to pay the other 50% to myself because I deserve it. I work hard and I deserve it. If you don't pay yourself, your business is not going to last for a long time. You know why? Because you're going to be bitter. You're going to be so bitter with yourself and you're going to blame yourself that you are paying everybody else except you. This is going to go back again. You have your cash coming in. The first thing is that how much do I need to be happy with myself? If you cannot start with what is the minimum amount that I can support my family, think about how much am I gonna be happy? Because sometimes it's not $10,000 a month. It's simply just, I want to take my kids out for a summer fun, right? Then take that money. Don't feel guilty because you cannot invest back to your business. You are working. You are doing everything that you can. If you are just sitting there in your business doing nothing and procrastinating, yes, you can feel guilty. But if you are working and putting everything in place to make sure that your business is growing steady, then you can afford to pay yourself. $500, $1,000, it doesn't matter. It's all about the process. And that's one of the things that I said. You can allocate a percentage. Say that you're going to pay 20% of all the revenue that you receive and stick with it. Then when you can afford it, you start increasing it again, little by little. Okay. And again, it's going to go back to planning. As much as you want to avoid the numbers, if you do not plan for it, and then you do not stick to a process, you're going to ignore yourself and you're going to care for everybody else. At the end of the day, you got zero, big fat zero. And then I don't want that for anybody.
Amen. I'm laughing. I'm laughing because we have definitely, my wife and I have definitely had those conversations in the early days of just like, why you're slaving away. I see your, like, why aren't you paying yourself? And it's this conservative, like, oh, well, I want to invest more in my business, or what if I need to hire somebody, or what if this person doesn't pay? I don't want to take that money out. And so I started a couple of years ago. It's embarrassing that it took that long, but taking my paycheck first, taking my money out first. And that, I would never, and it's funny because I would never be late to pay any of our employees. I would never be late to pay our contractors. So why am I treating myself myself worse than my employees or our contractors? And even if it's lower, then I probably, I usually will write a bonus check at the end of the year, but knowing that that is coming out first. And even our bookkeeper was like, you're taking out this huge chunk of money on the first, we haven't even invoiced yet, whatever. And I just like, it's fine. The invoices will come, the cash flow will come. This is mine first. And if we are running into things where we're short, then we need to talk about our expenses. We need to talk about our contractors. We need to talk about other things. But I think entrepreneurs are very quick to say, okay, well, I just won't take as much money so I can pay to have this Facebook ad campaign or this contractor or this software. And it's dangerous. It's a dangerous cycle.
Amen to that. Because that is so true. And, like I was just interviewing another guest, Dana, and, she's actually part of Tara's group as well. She lives in Toronto. And then she told me that when she finally looked at her number, she was paying her staff on an hourly basis way higher than herself. So she was paying like an intern, $20 an hour. And then when she calculated her hourly, it was like $8.
Oh my gosh. Sounds about right. We've all been there. We've all been there.
And then, you know what? Like, that's why That's why, like this, what I am doing is I know I sound like a broken radio, keep telling people to care about their money, but I don't think we talk about finance enough. And I don't think a lot of entrepreneurs realize that every single decision that they make, it's either going to have an impact to your cash inflow or your cash outflow. At the end of the day, it will have an impact, every single one of them.
So with that, if people want to learn more about you or work with you, where should they get started? What's the best place to find you?
The best place to find me is on LinkedIn. I'm very active on LinkedIn, and actually I focus on that platform. This is where what I learned as well, Dana, like at the beginning, be visible everywhere. I'm like, I cannot be visible everywhere. I cannot go crazy. So I just choose one where I believe it's fit my personality and then where I can interact the best with people. And then the other one, it's my podcast. Contact me on my podcast, Her CEO Journey, the business finance podcast for women entrepreneurs. That's where you gonna listen to story about the financial journey of the successful entrepreneurs. And then you're gonna understand everybody has to go through it before they were forced to look at their number. They didn't want to. And my website, ChristinaSjahli.com.
And we will link to all of that in the show notes. Christina, thank you so much for all of this insight. It was so great talking with you today.
Thank you, Dana. Pleasure to be here.